It's our special holiday edition of Technically Speaking. Jim Wyckoff will give us his thoughts on the metals for 2013. And happy holidays to all. Jim Wyckoff joins me for this special holiday edition of Technically Speaking. Jim, always fantastic to see you.
Hello, Danielle, and happy holidays to you and everyone else.
Jim, let's start off this special edition by kind of looking back at what happened in 2012. I'm going to have to ask you to jog your memory a bit here, but looking back, what would you say were some real key moments in regards to the metals landscape?
Well, as I look back the past year, most markets were impacted by the quantitative easing by not only the U.S. Federal Reserve, but by China, the European Central Bank, the Bank of Australia. So I would have to say that the central bank very accommodative monetary policies have had the most impact on the precious metals markets and other markets worldwide.
Jim, and now as we head into 2013, what are really your main points that you're focusing on? What do you think investors should be paying attention to?
Well, it's going to be macroeconomic developments. We are starting to see the U.S. economy pick up a little bit of steam. Nothing to get very excited about, but still some tepid growth nonetheless. We are seeing the European Union sovereign debt crisis at least stabilize, maybe start to improve just a little bit. Just yesterday, we saw the Standard & Poor's ratings agency upgrade Greece's credit rating by 5 notches. That was a shock to the marketplace. So those are signs that the European Union sovereign debt crisis is stabilizing, starting to improve. We're going to want to watch economic growth coming out of China. Anytime China sneezes, it seems like the world gets a cold. So we need to keep a close eye on any kind of any hints that of economic growth trend changes in China.
Jim, as we see these recoveries unfold, do you think that might add pressure to gold?
Well, Danielle, I think that as we see the economies recover, that is going to be bullish for the raw commodity sector because it's going to mean more demand. So you could argue from a safe haven perspective that could be a bearish underlying factor for the gold market. But my bias is that there's still going to be enough solid overall consumer demand, central bank demand for gold that the price uptrend is going to be able to continue in 2013. And if you look at the monthly chart that I provided you, it's still a fully bullish technical posture for the gold market on a longer term basis. For the gold market to get some serious technical damage inflicted, you're going to have to push spot or nearby futures prices below $1,500 an ounce to begin to suggest that that gold market has put in a major market top. In fact, if you look at the monthly chart, you can see that last accelerating uptrend line. If you do a 50% Fibonacci retracement from that uptrend line, you could drop prices even back to the 1,300 or 1,250 and still make a case that the longer term price uptrend remains in place. So looking at the longer term perspective, the gold market is still in a fully bullish posture, and the recent pullback we've seen on a longer term basis is nothing more than a slight bump in the road.
Jim, many analysts revised their earlier predictions of $2,000 gold by year end. Do you have any thoughts on that?
Well, as we head into 2013, I would say that in the first quarter of 2013, we've seen some downside turbulence to end the year. And for the first time in quite some time on a near-term technical basis, and by near-term I mean by looking at the daily chart. By looking at the daily chart on a near-term basis, we are in a near-term price downtrend in the gold market, and my Wyckoff market rating right now is 4 for gold on a daily basis. So we could see some more rough waters in the weeks ahead for the gold market. But as we move into 2013, I think that the overall raw commodity posture is going to be in a bullish phase. into 2013. The technicals are suggesting that based upon some work I've done with the continuous commodity index. Also, the macro fundamental picture with the improving world economies, with growth in China, with a stabilization in the European Union debt crisis, with some improving growth in the U.S. That all augurs for increasing demand for raw commodities, and that's going to be a bullish, significantly bullish underlying factor for the gold market.
So, Jim, safe to say you remain bullish on gold?
Well, Daniela, one more point. I think it's a wrong assumption to say that just because economies are growing, that's going to be a negative for gold because of the safe haven status. There's a lot more things going on worldwide that are worrisome than just shaky economies. We've got the unstable Middle East. We've got other situations that all would impact the gold market on a positive basis if that uncertainty, geopolitical uncertainty, flared up. And looking back over the past few years, it seems like there's always something going on worldwide from a geopolitical basis that's a worry to the marketplace, and that's going to be an underlying bullish factor for the gold market.
Jim, you said 4 for gold. Let's get some of your thoughts on silver now. I read one analyst report that was suggesting it's time to sell silver and buy some Chinese renminbi. What are your thoughts on that?
Well, Daniela, I've said this for a long time. I still believe it, that silver will be a follower of the gold market. If gold continues to trend higher, makes new highs, then I think silver is going to follow to a degree. The one thing that silver does not have that gold does have is that gold is the keen safe haven investment vehicle. Silver is to a degree. The thing that silver does not have is when the going gets very rocky, when there's very high anxiety in the marketplace, silver can act more like a raw commodity and follow the raw commodity sector lower as a risk asset, as opposed to when gold can be the keener safe haven asset and rally during those higher times of anxiety.
So, Jim, what rating are you giving silver and what trading range are you looking at?
Well, silver, I'm going to say silver has upside to above 35 or 36, possibly higher in 2013. I would say that you're probably going to see some value buying coming into the silver market if prices drop below the $30 level.
Jim, and finally, I've been asking all my guests this final question. If you had to choose the most influential person that affected the markets this year, who would you say it was?
Well, hands down, Fed Chairman Ben Bernanke and his accommodative monetary policy has just by the way the markets have reacted to after every FOMC meeting, he, in my mind, is easily hands down the person of the year in the marketplace.
Jim, thanks so much. I wish you and all your loved ones a very happy and healthy holiday season.
Same to you, everyone at Kitco, and have a great one.
Thanks, Jim. We'll see you next year. And thanks for watching this special holiday edition of Technically Speaking with Jim Wyckoff. Wishing you and all your families a very happy and healthy 2013.
Hi, it's Debbie Carlos with Kitco News, wishing you a happy and healthy holiday. Have a great 2013, and thanks for rating.
This is Alan Sakura. Merry Christmas, and we hope you have a golden new year.
Hi, this is John Nadler wishing all of you a very happy holiday season and a happy, healthy, and prosperous new year.